Apple's profit margins really took off in 2007 once it released that iPhone. But since then, the competition and a lack of a real breakthrough product has pressured the company to lower its prices. Now, the iPhone is truly the lifeblood of the company, makes up 56% of revenue. But sales have been slowing as phones of Google's Android OS really take off and as Samsung launches more aggressive products. Now, in the last quarter, Samsung had a 29% lock on smartphone shipments, shipping almost one-third more smartphones than Apple. A really big shift from the beginning of last year. Now, Betty, gross margins for Apple dropped to 39% from 45% the year before due to the iPad mini, higher costs for other productions, and price cuts for existing ones. And we heard just today Topeka Capital saying it could intro a lower-priced iPhone by the end of the year. And analysts saying unless CEO Tim Cook unveils some kind of revolutionary product with premium pricing versus just the old iterations of old products, the stock could really remain under pressure.
Now, Alex, is there such a product that could really save Apple?
Well, you hinted at it before. How about a watch that can make calls, access the web, and provide location tracking devices? Now, that's according to Poonam Goyal of Bloomberg Industries. Now, that watch, she says, could sell for less than $200, so it could really reach the fastest growing portion of the watch market and also the most profitable. And Apple's margin could be about 50%. That's twice as much as an Apple TV or a cheaper iPhone, according to some analysts. And as you reported earlier this morning, New York Times saying yesterday that the Apple is developing a wristwatch-like device. Betty?
It'll be interesting, an Apple wristwatch.
Right. Wonder how that would work, yeah.
Now, what about moving more into China? How could that help Apple?
Well, you always hear about companies really going to China to diversify. It might help them in volume, though, but not in margins. It's going to be very hard for Apple to charge premium prices there. Its gross margins are expected to decline in fiscal 2013 to just under 38%. That's for this quarter, down about 10% from a year earlier. And, of course, these concerns really adding more pressure to the company to return some of that $137 billion in cash to shareholders to sort of make up for that slowing growth. And the board is reportedly considering David Einhorn's Greenlight's proposal of issuing higher yielding preferred stock. That's at least returning some of that money after its annual proxy. It said that it had no plans to issue them.